Hello and welcome. You're watching Agronomy and Economy. I am Ryan Buetow.
And I'm Levi Helmuth.
I'm an NDSU Area Extension Specialist in Cropping Systems.
And I'm an instructor with the North Dakota Farm Business Management Program, employee of BSC.
And today is March 9th, 2016. Why don't we get right into the markets?
Alright, moving into the markets. Grain markets, WASDE report came out today. It didn't change drastically though. I don't expect any major market action coming off of this. For corn, the WASDE report did have South American productions 0.5 million tons lower. I don't think that's a big enough change to improve the market. That's kind of what we talked about with the weather conditions down there. There was some adverse weather, but it wasn't adverse enough to cause a major production issue. On the board, May corn's trading around 358. It's kind of mixed off the last couple days. 356 looks to be a bottom resistance level. Wheat, the WASDE report had supplies lowered 3.3 million tons, but consumption was lowered 2 million, so it's kind of a wash a little bit that way. On the domestic front, there's 10 inches of rain have been forecast for the parts of the Midwest. There's flash flooding concerns. This has a bigger impact on the Chicago soft red market, but that does spill over and has helped support the MGX hard red spring wheat prices. And we have seen that with the MGX trading over $5 on the board, 508 trading today. So these weather issues are supposed to continue the next 7 to 10 days. So there is a potential for a price rally. So if you need to move some of the 2015 inventory, maybe look at what's going on that way. Next report, big day, March 31st. Perspective planning report. I do expect that report to kind of be a mover and shaker in the market as far as with the prospective acres planned for each crop. Spot prices so far in March: hard red spring wheat $4.27, hard red winter $3.60, durum $5.94, corn $3.05, canola $13.46, oil sunflowers $13.92. Moving into cattle, on the cattle markets on the board, April feeders trading higher at $1.59. The last few days showing $1.56 to be a solid resistance level. On the same note, $1.59 seems to be an upper bound from back in February. But it'd take a little bit of a shift to get over that spike over that $1.60. April live cattle are trading around $1.37, leveling out from a 3-day upward trend. On a March 4th cattle facts report that I found, it has a concurring opinion for calling with a return to a normal cattle cycle. Last episode we talked about a couple drovers articles I found that were saying we're returning to a normal cattle cycle pattern, and this is agreeing with that. Calling for the next 60 days to be some of the best market fundamentals with a tightening of supply and a decrease in carcass weights in favorable weather conditions. So keep in mind, grilling season's coming up. We've always seen kind of a price spike off of that. Look for live cattle trading the $1.30s, maybe peak in the $1.40s this spring, and then move into the $1.20s over the summer for kind of a long range forecast that way. Average regional spot prices: 400 weights were $2.08. 500 weights $1.92, 600 weights $1.76, 700 weights $1.60. Bred heifers were at $18.94, stock cows were at $18.75, and short-term cows were at $10.88. So that's the market report.
All right. Well, today's topic of the day, we're going to talk to you a bit about managing risk. It's a very large topic, but as you all know, there are some things that need to be prepared for as the growing season approaches. So.
Definitely, and anytime we talk about risks, from an economic standpoint, there's a lot of different ways we can talk about it and how to define it. And one of the first people to do work in this area is Frank Knight, and he defined risk as measurable, and uncertainty is what you can't measure. So whenever we look at stuff, you have knowns and your unknowns, and you need to ID what you know and how you can address what you know. What the best way to go about mitigating risk is what we call it. You can't ever get rid of risk. You're never going to completely get rid of it, but you can mitigate it and reduce its impact on your operation.
Right, and one of those risks that you have is nutrient deficiency. And a great way that can be mitigated is with soil sampling, along with checking your NDSU fertilizer recommendations, and to be sure that you don't over-apply those nutrients. So for example, there's a new sunflower fertility recommendation out that shows, well, sunflower does use some phosphorus during the year. Applying phosphorus does not show any yield response. So there's that.
Yeah, that soil testing and looking at these different reports and recommendations are all ways to diversify your toolbox. So when I talk about this mitigating risk, you want to have a wide range of tools because you have a wide range of risks that you face. I mean, if you only have a hammer, everything looks like a nail. You need a screwdriver and a crescent wrench, etc. So that's what the soil testing, that just helps add another tool to your toolbox. And I talked with some guys about this, some producers, and they tell me, well, yeah, and that costs money, and then you got to have time for the guys to come out before I get in the field and test everything. And I think it's very important. I guess I look at this, maybe this is because of a cattle background, but when you have a pen of cattle, you take time to balance a ration and look at their nutritional needs. And you either do that off of your skill set or you go get help from a nutritionalist and help balance that ration. And with soil testing, you're looking at what's available for nutrients for the plants, and you're coming up, your fertilizer you're going to apply is a balanced ration of feeds that you have available, nutrient sources that you have available for these crops.
Definitely. And just like with cattle, genetics are very important for crops.
Absolutely.
So you need to be sure that you pick a variety that's well suited for your operation. It will limit your risks for disease and other damaging factors like insects, while still filling your grain cart.
Yeah, that's definitely important. I mean, we want to feed the world. It's a very noble goal, but you want to make sure that your operation's economically viable this year, 5 years, 10 years down the road. So that being said, economically viable, it's a revenue stream. And you've already got we're talking about having time and money invested in this crop, looking at the genetics, doing the soil testing, that's capital and that's labor that you have invested in it. So if you insure your farm and you insure your vehicles, that you're maybe off your vehicle, you're maybe not getting a revenue stream off of that, and you have that insured, doesn't it make sense and it stands to reason that you should look at insuring this revenue stream through crop insurance?
Definitely, and the deadline for applying for insurance is approaching, as well as spring is approaching. With this nice weather lately, you may be itching to get out into the field, but you need to be smart about it, and be sure to check the earliest date for planting with crop insurance.
Yeah, I feel these guys. I'm definitely got some spring fever, itching to get on the golf course, but I gotta check and see when the golf course is open. Can't be out there before the course opens.
Yeah, we'll have to get out there soon. So I think that's all we have for you today. Have a good one.
Thanks for stopping by.